Today, December 10th, 2025, the Federal Reserve cut its interest rates by 25 basis points. The stock market loved it. This is the S&P 500 with a 15-minute bar view. You can see the moment when the news was released and up the stock market went. Now, I contend there are 3 sentences in Chair Jerome Powell's opening statement that tell you everything you need to know about why the market loved this decision. Here are those 3 sentences. I put them down in the captions if you want to read them, but let's break them down one by one. We have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This is the Fed reminding us that they have been quite generous and they have conceded at these meetings to the market's desire to lower rates. Now, this one's very important. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. This is the Fed saying that, look, interest rates are coming down and they're doing the job they're supposed to do. The labor market's going to be okay. Inflation is just going to continue going to its 2% target. And as soon as the impact of tariffs are done, inflation will no longer be a problem. So all is well. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risk. Now, this one to me is the big kicker. The Fed said that it pretty much might be done cutting rates, because what the neutral rate means is that that's the rate at which the Fed is neither biased towards easing or tightening. But the big caveat that Powell put out there is that depending upon incoming data, rates could actually go down. And also in this meeting, he said that there is no base case for interest rates going up anytime soon. So that means we are biased actually to the downside based on this statement. All right, so let's remember the last time the Fed cut rates in September, the market topped out. We are back at all-time highs or just close to all-time highs on the S&P 500. The ETF of small caps is at all-time highs and the NASDAQ is still trying to catch up. So the big question is the market going to top out again as interest rates could go back up? Or will interest rates at least stabilize or go down and allow the market to continue higher? Keep an eye on this channel for what comes next. Thanks for checking in.